Well guys, welcome into today's video. Hope everybody's having a great day out there. As always, we have an Elon Musk leaked email that was sent last night to Tesla employees around Tesla stock. We're gonna talk about this in this video, what this means. Elon Musk is talking about the potential that Tesla stock could get crushed if they don't reach certain profitability measures and things like that, okay? We're gonna talk about that. Then after we talk about all that, all the stuff that's in that email, I'm gonna show you guys everything that was sent to the Tesla employees, okay? After that, we're gonna get on the whiteboard and I'm gonna show you exactly my projections for Tesla's revenue and net income for the next 10 years, okay? I haven't done something that epic around Tesla stock in at least a year or two, okay? It's been a long time since I ran through all the future numbers that I see for this company as a Tesla investor, okay? So that is gonna be like one of the sickest things I've done in a long time, okay? So I hope you guys really enjoy that. All I ask from you guys in return is a smash of that thumbs up button so we can get a little help in that YouTube algorithm. I appreciate each and every one of you guys that are part of the thumbs up squad. Also, if you want to check out Stock Hub, it's absolutely free to do so. You can join in there and just talk, a bunch of different stocks, including Tesla stock with a ton of other investors from all over the world. I think we're at approaching like 28,000 members now or something. So it's growing very quickly, okay? So number one trending article on CNBC. I said, oh man, I gotta make a video about this one, okay? Musk warns Tesla employees the stock will be crushed if they don't control costs. Tesla CEO Elon Musk said in an email to employees on Tuesday, warning them that they need to control their spending in order to continue squeaking out quarterly profits, even though shares of Tesla are trading at all-time highs, ahead of the company's inclusion in the S&P 500. This year, among other things, Tesla began spending to build a new factory in Austin, Texas, and another in Berlin. The company also embarked on a makeover of its paint facilities, which are part of the U.S. vehicle assembly plant in Fremont, California. This is coming from Elon Musk now, okay? Investors are giving us a lot of credit for future profitability, but if at any point they conclude that's not going to happen, our stock will immediately get crushed like a SOFL? What is a SOFL, okay? I actually don't even know what it is, but it sounds bad, okay? It sounds bad. Under a sledgehammer. A SOFL under a sledgehammer. I don't know. It just sounds really bad, okay? Musk wrote in the email, which was obtained by CNBC. The electric vehicle news site Electric previously reported the contents of Musk's email. In early 2020, amid sluggish auto sales the world over, Tesla cut some employees' pay temporarily, slashed contracts with temporary workers, and fired an undisclosed number of workers after an annual performance review process. It has since rehired contractors and restored employee pay. The Tuesday email echoes previous statements by Elon Musk, but does not specify how Tesla plans to mind its budget. On the company's third quarter earnings call, Elon Musk told analysts and shareholders, quote, "We're trying to spend money at the fastest rate that we possibly can spend it, but not waste it," okay? So yeah, that's Tesla for you, They want to spend as much as possible, as fast as possible, but try not to waste the money essentially, because you're trying to build the biggest pie possible out there, okay? But on the same call, Tesla CFO Zachary Kirkhorn said Tesla plans to ramp up its capital expenditures by $2 billion versus its prior stated plans of $2.5 billion in 2021 and 2022. Among other things, he said the increased spending would enable Tesla to insource things like its battery cell manufacturing. We know there's a lot of technological work and IP work that has been going on with Tesla in regards to battery cells, okay? Tesla raised $5 billion in September through an equity raise, but needs to pay down about $1 billion in its fourth quarter related to converts, okay? Now, this is a full email from Elon Musk, okay? This was once again sent yesterday, okay? Last night, I think it was, okay? At a time like this, when our stock is reaching new heights, it may seem as though spending carefully is not as important. This is definitely not true. Remember, this is Elon Musk sending this, okay? When looking at our actual profitability, it is very low, around 1% 20% for the past year. Investors are giving us a lot of credit for future profitability, but if at any point they conclude that's not going to happen, our stock will immediately get crushed like a sofa under a sledgehammer. Once again, what the heck is that, okay? Much more important, in order to make our cars affordable, we have to get smarter about how we spend money. This is a tough game of pennies, requiring thousands of good ideas to improve part cost, a factory process, or simplifying the design while increasing quality and capabilities. A great idea would be one that saves $5, but the vast majority are 50 cents here and 20 cents there. In order to make the electric revolution happen, we must make electric cars, stationary batteries, and solar affordable to all. Thanks and great working with you as always, Elon, okay? This is big stuff here. Elon's saying, hey guys, we got to focus on this profitability. The stock's been going crazy. Obviously, there's huge expectations over the next year or two that Tesla's going to increase profitability dramatically, okay? And so, yeah, there's definitely a lot of pressure on Tesla stock. And if, numbers aren't what a lot of people think they are, I mean, yeah, the stock could absolutely get crushed when it's at the type of levels it's at, okay? Which, keep in mind, just based upon that email today, it freaked some investors out. I mean, look, the stock's down over 3% here today. The Nasdaq's like basically break even, and Tesla stock's down over 3% because a lot of people saw that and they're like, oh man, is this upcoming quarter going to be bad? Are they, not saving enough money? Or is the profitability not where it's supposed to be? And so definitely a lot of people are kind of getting freaked out. So that's what Elon Musk has to say there around profitability for the company. And like I said, I agree with this because there is an immense amount of pressure on this company over the next 1 to 2 years specifically to increase profitability rates at a substantial rate. That's like expected from this company now. So if that doesn't happen, definitely, a lot of investors could get scared out of the stock. And remember, okay, this is very, very important. It's not just Johnny buying 2 shares of Tesla stock on Robinhood that's made Tesla go to a $550 billion market cap, okay? I can promise you that. What it is a ton of big funds out there that have been buying into Tesla stock over the past year that have now become believers or sort of believers in Tesla stock. And so a ton of those funds, if all of a sudden they don't see profitability measures getting hit the way they should be, if they don't see the revenue numbers coming in the way they thought they would as far as revenue growth goes, and those sorts of things are just overall execution, some of those big funds could sell out and you could see the stock go down 20, 30, 40, 50% in a very quick amount of time. Whether that happens or not, we'll have to see. But believe me, it's not just all a bunch of Robinhood investors entering Tesla stock. I can promise you that. When you get that big of a company to move that much, you're talking about billions and tens of billions of dollars pouring into that stock just to continue to make that stock go up and up and up, okay? So with that being said, that's what Elon Musk has to say. That's the whole email situation, okay? Let's go ahead now. Let's run through projections for Tesla around revenue and net income for the future years, okay? And we're gonna do this all the way out until 2030. That's as far out as I can possibly take it when I'm running my numbers, okay? So, Tesla 2021. This is kind of what is expected from most people out there. Most people on Wall Street on average, okay? Like the average on Wall Street is expecting Tesla to do about $45 billion of revenues in 2021, all right? And from what I'm seeing, the average person on Wall Street is expecting net income to be somewhere around $3.5 billion roughly, okay? That would mean 7.7% of revenues is hitting bottom line, okay? And this is going to be a very important number in future years for Tesla. Now that the company's starting to reach some level of profitability, this number is going to be super important. Now remember, Elon Musk was talking about 1% has been hitting bottom line, okay? So this upcoming year, a huge improvement, like the biggest improvement like Tesla's ever had pretty much in profitability is expected for this company. But remember, it wasn't that long ago that Tesla was losing $1 billion a quarter, right? So for the company to be losing $1 billion, then now making a profit, to go to something like that is definitely a possibility, especially when you look at the ramp of some of these vehicles coming out, okay? So I kind of agree with those numbers. I think somewhere around 45 billion they'll do in 2021 revenues, and I think somewhere around maybe best case scenario, $4 billion in net income this company do. So I agree with those numbers, okay? Now from here on out, we're going through just my numbers, okay? The numbers I have, that's strictly me, okay? This is more Wall Street plus me, this is me, okay? So let's start getting into some of my numbers in those future years, okay? So my projections for this company, 2021 through 2025 essentially, is basically that they grow top line like 40% a year roughly, okay? Some years are gonna be a little better. Some years they might grow revenues 45% or 50% depending upon, when products ramp. We've even heard a lot of people say, Tesla's gonna grow 50% per year each year for the next 10 years, okay? I'm a little more modest in my numbers. I'm saying about 40% from basically 21 through 25. And like I said, some of these years they could come at 30%, 35%. It's not the type of company you should be flipping out over if they hit 30% and be like, oh, now they're only go around 30% and they're only gonna grow 20% next year. It's not the way it works. Because their vehicles are expensive, think about it. Like a vehicle costs, what, $40, $50, $60, $70,000, most of these Teslas. So when you're looking at those numbers, plus what if they have a big, huge project, like an energy facility, that could bump up numbers huge. So I don't flip out. I just kind of look at it as 40% roughly per year, okay? So 2022 revenues, I expect for this company, $63 billion of revenue in 2022. Something to keep in mind about that number is it's still relatively small on a scale of the biggest automakers in the world. Like the biggest automakers in the world, they're all doing 100 billion plus, okay? So even though $63 billion of revenue sounds really huge, it's huge for Tesla at that moment, but it's not huge for like the auto industry in general, okay? And especially not huge from where Tesla's gonna be going, in future years after that, okay? And I expect them to make some improvement on net income as well, okay? So I think the company will do about $5.7 billion of net income in 2022, which would mean about 9% ends up hitting the bottom line, okay? Like I said, this number is gonna be very, very important moving in future years. How much of that revenue coming in the door is actually reaching that bottom line, okay? It's gonna be a bigger and bigger thing over time, okay? Now, 2023, at a 40% growth rate, revenues should come in somewhere around roughly $88 billion for this company, all right? So now we're talking about, okay, we're getting into some fun numbers, okay? Net income, I think, will be $8.8 billion roughly in 2023, which would mean about 10% of the revenues actually hit the bottom line. When I look at the product roadmap, when I look at how the factories should have ramped by that time, Cybertruck should be in full production around the world, plus you got Model 3 in full production around the world, plus you got Model Y in full production around the world, plus you should have the Semi in full production around the world, plus you should have full autonomous driving. You're gonna have full autonomous driving even in 2022. You can make an argument that it's already starting to happen. But as far as like mass adoption of full self-driving vehicles, I think is really gonna happen in 23. And I think that's gonna help that number get to about 10% roughly, okay? Now, real quick, we gotta talk about something, okay? In these future years, I never have them improving basically the top line to bottom line. Why is that? We'll get into that in just a moment, okay? And I'll explain my thinking around why I don't think that number is gonna improve for a few years. It will improve after that, but for a few years, that number is going to stay somewhat stagnant, actually, in my opinion, okay? 2024, I see this company having revenues of 123 billion roughly, and I see the company having net income of a little over $12 billion, okay? And once again, that means about 10% of revenues are actually hitting the bottom line, okay? So at this stage now, this is going to be an important moment for the company because what you should see right around 2024 is you should see all the other automakers probably starting to shrink their revenues quite substantially. And you're going to see Tesla starting to emerge as one of the top revenue companies in the world. And I think by this moment, Tesla will likely already be the most profitable automaker in the world. Because what I see is the other automakers, their profitability going down dramatically. Because I feel like these years are where you really start getting mass adoptions of electric vehicles. I think 21 and 22, I think those are still the excitement years, the hype years, still like that second generation of adopters are coming in. And I think this is all mass market after that, okay? This is gonna be the average Joe's going out and buying a Tesla rather than going out and buying a Toyota or a Honda or, a Chevy or a Ford or something like that, okay? Or a Volkswagen, whatever, okay? That's what I see there, okay? And then 2025 is the year that I believe Tesla will become the biggest automaker, even though Tesla's much more than an automaker, right? But the biggest automaker top line in the world in 2025. And I see this company doing over $170 billion of revenue, okay? And I see the other ones shrinking over, the next few years, okay? Net income of over $17 billion. So now we're talking about real big profitability, okay? And still about 10% reaching bottom line. Now, something to remember here, I don't know why I wrote 17.3%. It's supposed to be $17.3 billion, okay? Something to keep in mind here is this is why it's so hard to judge Tesla's valuation, right? Because if we're talking about this company's doing $15 to $20 billion of net income in 2025, it doesn't make Tesla look that crazy expensive, okay? Even if you're looking at 2023, 2024, the company doing roughly 10 billion, if not more than 10 billion in those years, and you're looking at a $550 billion market cap right now, it doesn't look incredibly expensive because you can start to justify, oh, that's like a 50 PE based upon 2023 or 2024 numbers, right? Never mind on top of that, the company's going to continue to grow. We're going to get into those numbers in just a moment, but the company's just going to continue to be a growth beast for a long time after that. So when you look at it from that perspective, it's actually, this is why I still can't sell those 750 shares in the public account, because I'm looking at it and I'm like, even though the stock's gone up so much, you could make an argument that, oh my gosh, this company is in a pretty dang good position for the next decade, okay? Now, why do I have no improvement in this 10% number from basically 2023 to 2025? The reason I don't, okay, is because what I think is going to happen is those are going to be the years when the company is building up and scaling the robo-taxi network, okay? And the robo-taxi network will not help net income in the short term, okay? Longer term, it will, okay? But I can tell you that robo-taxi network is going to be cost heavy. And so even though the company can be improving and scaling the business way better, I actually don't think there's going to be any improvement for about a 3-year period in basically that revenue to the bottom line, to net income, okay? That's the way I see it. That could freak some investors out during that time. That could make some other investors really excited because they understand, oh my gosh, the robo-taxi network is scaling, it is building out. Yeah, it's a money loser right now because I think everything else in Tesla's business will be getting more and more profitable, but that robo-taxi network will absolutely be a drag for several years on the business. But think about this long term, like, if Tesla can be the biggest company in the world, the robo-taxi network, we're talking about like the Uber, Lyft, the Careem of, like self-driving vehicles where there's no driver in it essentially, and the car's just coming to pick you up. Like, imagine how big that market is long term, right? And so if Tesla can be that company, I mean, my goodness. But yeah, it will be a drag on the business. That's why I see just 10%, 10%, 10% for several years out. I think 2026 is when that business will start to scale, okay? So that's what I have over the next, 4 or 5 years. Now let's go ahead and start running through the last part of my projections, which is 2026 through 2030. Hope you enjoy. Well guys, this is where it starts to get fun for the super long-term investors. So I know obviously some of you guys might just be in this for the short term or something, but a lot of you guys that watch this channel, you're in this stock, I hear from you guys all the time, like you're in this for the next 10 years essentially. So for you guys out there that are in this stock for the super long term, I think this is gonna be the most fun part of the video for you guys specifically, okay? So let's start getting into this, guys. So first off, 2026 through 2030, I personally see the company growing basically top line on average about 20% per year. I don't think the company will keep up its 40% that it had going from like 21 until 25. I think about 20% per year. Remember, some years are going to be better than that. Some years they might grow 30%. Some years they might grow 10%, 15%. A lot of it's going to depend on new product launches and things like that. Although I will say, I think things are going to get more stabilized from basically 27 through 30. The reason being is that robo-taxi network, remember I talked about them building out, right? I think that's going to be an extremely predictable business long term. I think you're going to be able to see like rates be very predictable, the amount of trips be very predictable over time, and I think that'll be a super predictable business, and it'll be much more predictable for the business model than like big energy projects or big like, you know, ramps for a new car or something like that. Okay, so here's what I'm seeing for this company, okay? So 2026 is, I think, the first year that in many years that they'll start to see more flow through from top line to bottom line, okay, of about 12%. So I see them doing about $207 billion roughly in 2026 for revenues, and about $25 billion hitting that bottom line for net income, okay? And so like I said, that'll be an exciting year for the company in my opinion, because that'll be the first time in many years that people will have seen, oh my gosh, the robotaxi network's finally starting to make some money. Woohoo, okay? Remember, I think it's going to take several years. I think 3 years probably for that robotaxi network to either not be a drag on the business or just start making some sort of money, okay? 2027. All throughout these years, I see a continuous improvement in basically flow through from the top line to bottom line, okay? I think, you know, if you just look at Tesla, how well the company's already built and how far in front of everybody else they are in front of the competition, right? I think as long as they keep the pedal to the metal, as they say, right? No pun intended for a car company that, you know, sells cars, right? But as long as they keep things going, they're going to keep their lead likely in front of all these other companies, and they're going to stay several years in front of these guys, and they're already going to have the branding power. Like, you know, you think about electric vehicles, the first name that comes to mind, and you don't really think about anything else, is Tesla, right? That's just huge brand name, like, you know, recognition, like no different than Kleenex or something like that, right? Or, you know, if you say, you know, you don't just say, I just want a soda, you say, I want a Coke, right? Just like huge brand name. Never mind that. If you're already starting to think about like self-driving vehicles, the self-driving vehicles, think about already are Teslas, right? Never mind if they're the first to really build out the robo-taxi network, the word association will always be there, and they'll just always be the biggest, okay? So, never mind, as long as they keep their competitive lead. 2027, I see this company doing a little under $250 billion in revenues and about $35 billion of net income. That would mean 14% flow through for that particular year. So yeah, things start getting really, really fun as the business starts to scale, and the production, you know, is just off the charts. The robo-taxi network's built out. 2028, I see revenues of about $300 billion for this company and net income of $48 billion for this company, which would be 16% flow through to the bottom line. And we'll look at some other numbers of some other companies. You'll realize this flow through is actually not that high at all, okay? I actually think I'm taking these numbers a little conservative, but that's fine. I'd rather be a little conservative. And remember, how many future products this company's going to come out with in the future. Remember, the business, like an insurance business, imagine the cash flows that can provide for this business as that gets built out, and all these taxis that are in the robo-taxi network, or all, let's say, with Tesla's insurance product. And imagine if the other tens of millions of people that will have Teslas by this point in time, if they all have Tesla insurance. You know what I mean? Like, you just start adding up all these things. Everybody has autonomous driving by this time. Like, no one's, I can't see people like buying cars without autonomous driving by this time. Like, that would just be like, what? You're gonna have to drive it around all the time, like that. Just like, it's just ridiculous to even think about for somebody that's really, you know, looks at the future. 2029 for this company, okay? Revenues of about $360 billion for this company, and net income of $65 billion for this company, okay? That would put in about an 18% flow through rate from top line to bottom line, okay? And 2030 is a year where I think this company will reach the massive scale, and I think this will be the stage in the company where they can keep a flow through rate steady around where it's at, okay? And so 2030 for this company, the granddaddy of them all, I see the company doing about $430 billion of revenue, and I see this company having about $85 billion plus at that bottom line net income, okay? That would be a 20% flow through rate from top line to bottom line. And I think they'll be able to likely keep that number for hopefully years to go into the future, somewhere around there roughly. Now, this 20% number, keep in mind, this is not some crazy high number or something like that. I know you see the big revenue number and you see the net income number, and 85 billion looks like a lot, right? If they were doing 85 billion today, that would make them the most profitable company in the world, right? Most profitable company in the world, Apple will probably do, let's see, 65 to $75 billion of net income in 2021. okay? Apple will do. So, you know, if they were doing that number today, they'd be the most profitable, but keep in mind some of those companies might be even more profitable at that time. So this number's not crazy. Likely some of the biggest companies in the world by that time will be doing well over $100 billion of bottom line. Well over, okay? So here today, companies like Apple have a 21% flow through right now. 21%, same with Google, okay? Microsoft has a ridiculous flow through of 30%, okay? I don't, you know, if Tesla ever got to that place of 30% flow through to the bottom line, I would love that, okay? I'm not projecting that. Remember, whenever I'm doing these projections, I want them to be realistic to what I expect, but I also want to be, I'd rather be more conservative and take a flow through more toward a business like Apple that's at 21%, you know, 10 years from now than, you know, something like a Microsoft that's at 30%. Because, you know, those sorts of companies like a Microsoft that have a 30% flow through, or, you know, there's a few companies that might even have a little better than that. Those are free companies, okay? And a lot of times those companies are actually limited by their top line, because a lot of times those businesses are a little more software related, and so sometimes they're just a little more limited on that top line. Tesla's gonna be one of the biggest companies in the future, in my opinion, when it comes to that top line. No doubt in my mind, okay? Just when I look at the numbers and the projections and things like that. And, you know, I've seen other projections that some folks expect this company to be doing 500 billion, 600 billion plus in revenues by 2030. And that's fine, you know, everybody can have their own numbers. It's really hard to project out that far just because you're kind of trying to figure out, okay, are they gonna have more future products and services come in the market? Are those gonna be successes? What's the competitive landscape gonna be? What are the moves made by that time and things like that? But regardless, like the numbers start to get really darn exciting for this company. And that's why even at a $550 billion market cap, or let's just say 500 billion plus, that's why I still can't sell that stock in the public account. That's why I'm still holding it, because I'm just looking at these numbers I project out in future years, and I'm like, why do I gotta sell it, man? You know what I mean? That's just such a hard decision at the end of the day, because you're looking at it and it's like, ooh, it looks really expensive. But I mean, even when you go out just a few years from now, the stock already starts not looking very expensive. Never mind when you start projecting out 5 years from now, 7 years from now, 10 years from now, then it looks like it's a deal and a half for anybody that's a really long-term investor, right? So anyways, that's Tesla stock. That's my projections. Oh my gosh, guys, this was a beast to put all these projections together. So I hope you guys enjoyed this. As always, let me know what you guys think about future numbers for the company, and I would love to kind of read through some of your guys' opinion down there in that comment section. As always, I hope you guys enjoyed. If you don't mind, smash the thumbs up button. If you want to join us in Stock Hub, I'll probably have that as a pinned comment. If you want to apply for my private stock group, probably have that as one of the pinned comments as well. Thank you for watching and have a great day.